So here's our little Johnny. The way I just defined it is a big bar can have tails. So just we're looking for power bars. Can you spot and describe the big bars? I just put a bunch of arrows on a bunch of these things. I use little Johnny all the time to illustrate our keep it simple methodology. And I'm not going to get into this chart right now because it's more of I forgot. That's absolutely, I should have put an arrow on that. So this slide, we're just talking about, can you identify them? The rest of our session, we're going to put the bar together, the message, the pattern, looking for explosive moves or ending. But Greg, feel free to add whatever you want. But every one of these are big bars that have meaning. And I left that one off. I'll add it right now.
Some of those, you know, they're I wouldn't really necessarily call them big bars because some of these,
True.
they're about equal in size. But
Right,
the point being is I want it to jump out at me like
right.
that's unmistakable as a big bar. Like this one here, that one is like little Johnny would have to have a patch on his eye not to see that one, Dan.
Sure. And the one you circled here and this one.
Yeah.
So
Yeah.
this is
Yeah, this one, absolutely. And so when I look at this one and I compare it to these, I'm like, yeah, that's definitely bigger.
right.
But so my whole point here is to say, and when we all look at charts and we trade, we want trading to be the way we most things tend to be, meaning black and white. And that's why people gravitate toward these systems and red light, green light stuff to be told what to do. And so in a sense, we're telling you what to do, but in my opinion, in an intelligent way to determine differences and, requires a little bit of thinking and some time to get acclimated to the different concepts and to recognize them. Whereas, you know, so when I look at this whole chart and I look at some of these big bars, some of them jump out at me, especially this one, like I get that one 100%. Whereas some of the others is like, it's just kind of messy, so it doesn't really tell me to get ready to act, some of them. But what they do communicate is, some uncertainty. We can get into looking at different stuff.
All
I
right. So
can't fix YouTube. I don't know. It says it's streaming, but it will. YouTube has some problem. Thought I'd ask. Facebook's working.
okay. So I briefly showed you this a few moments ago. So this is our starting point. And some of these have power bars by definition. For example, this bull 180 reversal. It's a 2-bar setup. It's a wide range red bar followed immediately by a wide range green bar. That's a bullish 180 reversal. Again, that doesn't mean it's tradable. It just means that's what it is. That's our definition of it. And we need to see if we have a pattern on support, price void, all those other concepts. But I just wrote up here that power bars can be part of any one of these patterns. Any one. It can be a buy setup with a big fat gap engulfing reversal. I mean, this breakdown failure, we kind of want a big reversal that jumps in your face. Uh, you could have a big reversal on a W bottom. Now we're going to look at a ton of examples in no order, like we always do. We'll give you as many different flavors of what we're illustrating today. So this is a big multi-month bottoming pattern. We're pattern traders, right? So I see nothing to do on all of this. except maybe sell a put spread under here, but we'll get into that later. So Greg, do you agree that you and Johnny on this chart, this is the bar that first jumps out at me?
I just put a star at this one where
Okay,
it jumps out at me as like, hey, something is starting to happen here.
pay attention.
Doesn't doesn't tell me to do anything, but it catches my attention.
Okay.
That one is like, okay, whatever was happening there, by the time I see that one, I'd missed the boat. Right? I can see things that were happening prior to that, but they're not wide range bars. But that doesn't mean to move on that we can't get an opportunity. So, this here was in one of the 9 pictures, was the pullback. So the wide range bar is like, hey, look at this, Greg, Dan, Johnny. Something explosive happened here. And that power bar communicates to us that the institutions are getting involved because they create that kind of explosive move. And you can see, and it says right there, igniting breakout. So those words by definition means it cleared some resistance. And I would say it did it with authority. There's no mistaking the power that occurred there. It's just black and white. Now, how do we participate in that? Well, we have to apply the other concepts. Other than, well, we could have participated and just bought it with money management concepts, so you could put in an initial position with the right money management, of course. But that's probably going to require some patience. As I said, most of the patterns that we see, that we recognize as actionable in the moment, they tell us that we're likely to get paid right away. And this pattern here, in combination with that igniting bar and all of this that we could talk about for the next 2 hours, tells us that we're likely to get paid right away.
Yeah, so this is a close trade, our format. We give all trades in Telegram and put them in our members area, open and closed. And I mean, we teach what we recommend. We don't just give you the buy this, sell this. So we obviously over here we give you the date and the symbol, and so we bought the stock here. Always give the technical setup. So a buy setup and bullish reversal. I could have added there, like I did here, the reversal, 3-bar reversal is just above the 20 MA, but it's within the meat of this power bar. So that's the location of this reversal. This is a nice fluid move down. That's what we call the buy setup. So we entered on this green bar, multiple time frames. I'm not showing you the weekly, but it was a bull 1, 2, 3 on the weekly. So that supports the likelihood of this pattern moving in the intended direction because a bigger time frame is in bullish alignment. We give trade management. We sold half here, take the money. 2-day swing trade. Look, we got out at the high of this green bar. 2 days, $400. These are in no order. We just give many different examples.
And hold it a second. Doug says, how about candles and gaps? So we're talking about candles, and I'm not sure as to what you're saying. Gaps. Gaps are gaps. It's a place where no trades occurred. And from one bar gap to another bar. And so, this is a gap. This is a gap. This is a gap. And so gaps are another concept, and how you deal with those.
Yeah. So yeah, I mean, we entered on this day over the high of this red bar. You can see here 57.11. So we got the benefit of that gap and managed. So again, big bars, but I need a pattern. Swapping around. Now another wide range breakout. at the 20 period moving average. This is 20, 50, 200. There's Greg and I are always talking about other concepts. It's not just, hey, we're buying this 1, 2, 3, but this wide range breakout occurred from this small little breakdown failure. So that's just another piece of information which says that's good. We're in an uptrend, short, intermediate, long term, and we have a closing breakout of this bar. So do you remember the slide with 9 bullish pictures? This is one of those 9. So this one, man, remember I said wide range bars can occur in any of these? Well, it's mandatory in this setup. The first bar is a wide range bar with little or no tails. We got 1 or 2 inside bars that stay in the upper part of this bar. We buy over the high, stop under the low, manage in between. So
Hold
wide.
on.
Go ahead.
Let me respond to Doug. You said there were a lot of studies on gaps. Now, Doug, when you say there's a lot of studies on gaps, I'm not sure if you're talking about MT Live or whether you're talking about the hundreds of webinars that are out there going on
Yeah.
a week-to-week basis.
Yeah, the latter, I'm sure.
Well, there's always gaps. And you're saying, there are too many gaps. Well, when there's too many gaps and overlapping bars, that communicates uncertainty. And I said patterns communicate to us what people are thinking. Now, one thing that I would add to these explosive power bars is that many times they come after a period of uncertainty, but a contraction in how the ranges in the ranges, and many times the candles themselves are the bodies. So right now in the markets, there's a tremendous amount of uncertainty, as you know, and there are big bars and things they whip up and they go down and so on. But when they tighten up, and so here, things are you had a big move, right? A big move, and then the candles begin to contract and the bodies contract, and that contraction. So you can look at contraction in different ways. It's very obvious to all of us that this was a powerful move. And so now, the move begins to slow down where, traders have profits. Why does it slow down? Well, things moved up a lot and people have a profit and people are selling and other people are buying, and the battle between supply and demand begins to contract. And then at that point, it's like, what's it going to do? Right? Maybe it's going to roll over and go down. And so it attempted to do that. Here was a gap down, and then it reverses back up again. And here's your power bar. So let's just say that at this point in time, over here, as this starts going sideways, which takes a few bars, and especially when it gaps down like that, would you agree that that communicates uncertainty? Right? Are you uncertain whether this uptrend will continue? Will it decline down to the 50? Yeah, when it gaps down and starts going sideways like that. Whereas over here, it was pretty obvious that it was going up. It was extremely obvious that it was going up. And it started, when you talk about gaps, that's an igniting gap, a pro gap. And while this bar maybe doesn't jump out as a wide range bar, it's a lot wider than the bodies on these bars. So it's much more decisive. And wide range bars, how they're defined in the scans is that they have to open in one percentage of the range and it has to close in the other end of the range. So it has to be a decisive bar like that. It can't be a bar with tails on the top and the bottom. So when we mark these wide range bars, you can see like they jump out at you like that's a wide range bar. And over here, there's no more uncertainty because it opened here, it closed there, and it's a big bar compared to the other bars. It's black and white as we explain it. it's undeniable as to what it is.
This one here. This is what we call a climactic buy setup. Now, this red bar is the biggest red bar on this entire chart after it's far from the 20. It's not an action bar, but it says, hey, start paying attention that the last of the Mohicans are starting to sell. A green bar here. So that's what we call a climactic buy setup. It's not a quality one. That's not today's subject. But now 2T, we just label this 2T, meaning tails. So this one didn't get up very far and it made a new low. After making a new low, look at the range of this bar, a big bar. So it's bigger than these last three. It's an engulfing closing breakout of these three bars. And we haven't defined it yet. I should have. But you remember when we say we're pattern-based traders and I need a pattern and I need a price void? What we mean by that is for longs, look to the left. Because of this fluid move down, it has what Greg coined this price void. It has a void. There's insignificant resistance or overlapping bars because of the fluid move down. So that allows for a fluid move back up. So it's just a counter trend trade, but this wide range reversal bar after a new low was our little gotcha. We're swing traders. This is a 4-day swing trade, made $300 and we're off to the next trade.
So in all of these MT lives, we're teaching you a whole lot of stuff. Right? So as we're explaining what we are, we say many things that probably might go over your head in the moment. So again, the beauty of classes, the beauty of Master Trader Weekly Advantage, where you get the replays, you get lessons, you get the trades that are from the letters. So when Dan goes into a lengthy review of the trade, explaining the money management and why it was taken and so on and so forth. So I blocked off these letters, these bars, these candles, and I blocked them off because as we're looking at something like this, it's somewhat similar to what's happening in the markets right now, where there was this big drop to the downside, which created this space up above, lack of overhead resistance, and prices are beginning to consolidate here in a relatively ugly way, and they may continue to move lower. But this particular example, Dan mentioned it, and I'll point it out. In this particular example, as you look at what happened here, and that's the start of, what is that the start of? Green bar doesn't mean anything in the downtrend. In reality, the green bar should actually be ignored. And when I say ignore it, it don't mean you should ignore it. What I mean by that is generally green bars happen in bear trends and they tend not to go very far. And then prices continue to go lower. But in this one where it broke down, and that is the wide range bar. And while it didn't open at the bottom, it's more of what we'd call a range expansion bar, where it took out the lows. So think what happened on this bar. If you can answer relatively quickly, try. I know you guys got to type, but think about what happened what were the actions of traders at that moment in time and what did they experience? Fear, bears failed. Hey, Vera. I know Vera. Vera, we know each other. I remember you took my intermarket analysis course. That was what, 20 plus years ago? And so if now I'm going to go back and do this with a little less of the, so now it's like green bar, deal, big deal, right? It's in a downtrend. I know it's extended, but it could become more extended, right? And so as that goes and consolidates for a few days, it's building a consolidation that a breakdown can occur from, right? So it doesn't jump out at us as one of the continuation type setups that we would look at because it's just going sideways, but it's consolidating. And then what happens is it breaks lower and it springs up. It springs up, and it not only springs up, it springs up. It closes above the prior bar's high, and it's a big bar. That is a power bar because it has a shock element to it. Traders have gotten caught. What does that mean? A shock element. That means somebody got caught on the wrong side of a trade. And it doesn't mean that what they were doing was necessarily wrong, because at times we're going to get caught on the other side of a trade and while we have stops. But when you can recognize things like this, that's where the magic happens, because now we know that the odds are in our favor. And this was an ETF trade, so it was bought. But if it was a stock, right, not that you couldn't do it with an ETF, but it would. Can you imagine a credit spread selling a put spread, which is just a matter of selling a more expensive option and then buying a less expensive option, and the difference goes into your account depending on if it stays where you think it will. But the probability of this going back down under the low with this kind of picture is extremely, extremely small. So if we can find premium that's going to expire in a relatively short amount of time, fantastic. If we want to buy this, it's buyable as well. So as I explained, there are different parts of this that increase the odds of at least a short-term retracement. Go ahead, Dan.
Well,
You're bouncing around a lot today.
no, I'm just speeding up. It's like, well, I monitor over here. Downtrend. Big bar, but no pattern. Big professional gap, no entry. Retracement, broke down, snapped back. Here's a big bar that could have got my attention. Went up, drifting lower, retest, big bar. Now I have, well, let's see, breakout from bottoming pattern. So I think we just bought over the high of this bar. Went up. Here's our targets. 10-day. We held this thing for 10 days. Okay, all right. So yeah, my bad. We actually bought this over the high of this red bar. We did this just last month. That's why I remember it. So we bought it over the high of this red bar, being just another pullback after this explosion. And then we just look how easy this was to trail. We just trailed under a prior bar's low. They're not all that easy. It's a 10-day swing, 33% return.
It never broke a prior day's low.
It was easy to manage.
So the reason I drew those lines there was to reinforce what I said previously about the contraction and then the explosion. So people call these things wedges or pendants or ascending triangles or descending triangles and all of this terminology. It's just about recognizing things are getting tighter. And so whether, those that use like Bollinger Bands or some kind of thing that you visually see some contraction or however they measure it and sell you the ultimate indicator, All you got to do is look on the chart and say, hey, that thing's contracting, but you have to understand what preceded it. And then, of course, the wide range bar is the power bar that says, okay, everything's coming together.
Where's the power bar here? This is monthly chart. It doesn't matter what time frame. We read the bars. Here's a momentum move down. And remember my picture of nine bullish patterns. One of them was this, the W bottom. So a W bottom momentum move makes an initial move up, less than a third of the retracement, and some type of retest. There's different flavors of these retests, but the quick answer is, when do you feel confident that the retest is going to hold? Here, I didn't feel comfortable. I don't feel comfortable. I don't feel comfortable yet. Now I do.
What would
Now,
have made you feel comfortable?
me,
Yeah.
well, I'll tell you when I see it. That's my point. So maybe if this came down and had a higher look, I mean, there's 100 different flavors, and that's when we use bar by bar analysis. Um, right, right. But I didn't get that until here.
Hey, I'm just reinforcing for everybody that if there was a power bar there,
Okay,
the confidence level would have jumped exponentially because
absolutely.
it jumps out at you. It's like there's the tell. There's the institutions, they're getting in. They're afraid of missing out. FOMO, right? Fear of missing out. So here, where it's beginning to turn, it's still in a downtrend, and you get the reversal. And what does this communicate? Every pattern communicates some emotional situation or bias. So they were still tentative, and it broke the low, and
Yep.
then it comes back up again. So lots of different things. This 3-bar reversal right here probably has some kind of name, but that 3-bar reversal was the start of making a turn there. But the bars were small, so they were kind of like, yeah, you know what? This thing looks like it's going to turn around. Let's buy a little. And that bar communicates, I'm afraid I'm not going to get in, because they want to buy the pullback, and then, which is fine, normal. And then so they bid for buying, near the lows, trying to get in again to accumulate a big enough position. And then when they feel that they're going to miss out, then they have to take the offer, right? And so that creates that explosive wide range bar.
Johnny, where are my bars here? Well, this one could have started my attention gathering, but let's go right to here because it's the biggest bar in this whole chart. Yapped up, came deep to this minor support, and then closed with this big range expansion bar like we defined earlier. So it's still a power bar, but it's whippy and it broke out, and there's really no good entry for me here. Buying the high here, stop there. I wanted to settle down and give me a better pattern. Okay, so it gapped up. I got my 3 fluid bars down, retest. That's my buy setup in a wide range reversal. Now I have an inside bar. So it's a buy setup and a 1, 2, 3 continuation. And it just ripped. I mean, we held this one for 13 days. We bought call options, which we do for directional trades when they're liquid, because you get the benefit of limited risk and leverage. Look at this 13-day swing trade, 160% return on buying this call option for $1. So Greg, look, once again, this one's a topping tail. but I put a note here, although a topping tail at the close, it was a wide range ending bar at the day's high. So what I mean by that is it opened up here. So that kind of looked like a short-term exhaustion gap, right? Like it made a big move far from the 20. So we kept a tight leash on it, and I even say it here, possible short-term exhaustion gap, try to sell for $3.55, our call that we paid $1 for, which will be if it trades under 5. So notice how tight we were on management. It went all the way up here to, let's call it 5.15 or something like that, whatever. And then we got out at $5 near the high of that wide range bar that Greg just drew.
And I'll reinforce one more time about thinking and emotions. And tight, things got tighter. Right? This is a wide bar compared to the last two. And so as prices begin to go vertical, much as this did, I mean, common sense, let's call it 3.25 to 5.10 or 5.15 in a few days. Percentage wise, that's big. People are going to sell. And if it had gone up, and maybe this was a red bar, I'm just kind of making stuff up here. If this was a red bar and then it went higher, but the size of this, so while it's a wide bar, it wouldn't be defined as a power bar, meaning it's a wide range bar, a range expansion bar. But the size of it after a move up like this suggests that the momentum is likely to stall. Why? Because people are going to take profits. It doesn't mean it's going to collapse. I mean, I've seen plenty of charts in hindsight that I looked at and I said, wow, that is extended. And it pulls back or consolidates for a week or so, and then it rips higher again. And so, you have to make a decision as to, how you're going to manage your trades and what you're going to do.
Yeah.
Why is it an exhaustion gap, not a continuation gap, as it has gone up that much? Well, it really didn't gap significantly, meaning it gapped from here to here, which really is not a big deal. I mean, it's up a bunch. And then this communicates that traders bought the dip into the prior day's high area. Now, if it had opened up here, then we obviously would call it an exhaustion gap,
Right.
because the gap is so big.
Right. And that's why we said possible. Right. Yeah, I think we need to, we always like to save time to look at real things. But this is just a twist on big bars. It's something we just named a bearish gap that bullies pattern. So what we mean by that, and most of the time they occur on earnings, but on any news event. So it was a potential bottoming pattern. Still got declining 50, the 20 MA flattened out, went up, down. So I'm in a trading range. But look at this open, this gap open down here. That suggested lower prices, like a continuation breakdown. And then it rips and fills the gap within 30 to 60 minutes. Like all our trades, that doesn't mean buy it. It means pay attention, because we need a setup and a price void. So this one, inside bar, gave us a 1, 2, 3 from a big bottoming pattern, a 1, 2, 3 with a gap negated. So there's this shock element that Greg was talking about in a couple other patterns. So that was our entry. Nice 4-day swing trade for, $400, easy to manage. So at every MT live we do, there's so many examples we could show you. I mean, this again, the example of the topping tail tried to go up in a downtrend, closing at the low, nothing to the left. It's just a no brainer continuation short right there.
But it was this before it became that.
Perfect, exactly. Well, what is that second green bar? I mean,
This one
yeah.
just means momentum slowed down.
No, you put a second green bar
Oh,
here.
I didn't have an arrow, so I just
Okay,
used
okay.
that instead of going back and getting the thing.
All right. I didn't want to mislead them. All right, so I'm here, just, no brainer range expansion. It's not as big as this bar, but just a no brainer closing breakdown with a void. We
So Dan, think, and this might be a good thing to add to as before we get into charts, so we'll spend a little time, but adding a slide, what are the takeaways from this MT Live? Like everybody, you're willing to type in there, like what are some of the things that maybe stuck in your mind as to, significant points as that we covered? And while we're doing that, I'm just going to put up a different thing so I can
yeah.
put up. Dan, you're going to show this.
Wait, is this still valid? I don't even know this.
No, it's not.
All right, so yeah, this is a new product we came up with a couple months ago. Traders love it. It's ongoing weekly education, less than $10 a week. You get these replays that we're doing here, live trade reviews every week, technical lessons. You get email support, Facebook, mastertrader.com/advantage. Check it out. Email us with any questions. And then Greg will pull up his TC2000, and we can scan for these big bars in many different ways: bottoming tails, topping tails, wide range bars, exactly what we're going over with you today. And then it doesn't mean as we've highlighted, a big bar doesn't mean it's a tradable event. We do the manual searching to see if there's a tradable event.
Nobody wanted to type anything in there. So one of the things that I mentioned to think of, wide range bars after a contraction in ranges. Volatility contracted, ranges contracted, and you have, looking at what preceded that. So we drew a little wedge. There were bottoming patterns. There were shock patterns, prices that broke prior lows, and then there was a range expansion bar. So make some notes to yourself now, as to some of these points. And you're not going to believe this, but there are no wide range bars today. There's no big bearish ones. The market is dead. Yesterday there was plenty. And maybe I'll just switch to that. But this is one of the pages that we use for scanning, which is what the top-down approach, what's happening in the broader markets, the S&P sectors. These are ETFs, and these are all 142 different subsectors. So I sorted this a minute ago, and there are no bullish or bearish wide range bars. So as I click on these, it loads the stocks that are in that particular sector. And so then by sorting this up or down, I could see, are there any bearish ones or bullish ones? Maybe on a weekly time frame, there's probably bearish ones. And here, let's go with S&P 500. And so here, weekly chart, and you can see big bearish wide range bars right there.
Craig, look at khaki is a wide range. I'm surprised that's not. My alarm went off.
Maybe because at the end of the day, and I'll have to look at the formula. It's in the technology sector.
I sure thought that your formula worked intraday.
No, it does, but it hasn't met the criteria of it. So even if I look over here, where there are just wide range bars, over here, oh, before that wasn't filling in. Oh, here it is. It is in there.
There you go. Yeah.
That wasn't filling in. So this one doesn't define anything. This page doesn't define anything by the sector that it's in. And it doesn't define the trend, so you're not sure what you're going to find, but something like this, so big bar could be good for a credit spread.
Sure.
This is a mess, could be good for a credit spread. This could be good for a credit spread.
And bottoming pattern.
No, but they're so big, you have to look at the options for that. Now, this one here looks at bar. If you wanted to see from yesterday, this layout would find ones from yesterday. And so you can see yesterday's, there's a lot of this going on today. Yesterday was a big bearish bar, and today things are just, stabilizing. But we didn't even talk about wide range bars ending. This is a wide range bar ending a move where the momentum is going to slow down. Right? It's moving, it's moving, it's moving, and now there's this range expansion bar, and it's gapped up. And so I got this horizontal line, which means it must be in an area of support. As you can see, it is. So I clicked on that. I didn't want to do that. Brings up option stuff. Let's see. So Las Vegas Sands. Now we've got a stabilization day. What if we were to get tomorrow a bottoming tail bar, a bar that opened up like this, it traded below these two lows and then closed back up to the high on the day. So we'd have a combination of candles and then a little shock to the downside. That would be a great sort of a climactic buy setup. Well, you could do credit spread, of course. You'd have to look at the premiums. That's what this is here. You got options in there. But on a short-term basis, it would likely go up. So you got intraday charts here. So I use this particular layout for looking for things actually intraday as an anticipatory. So they're anticipating 1, 2, 3 type of patterns, and then I could see if it's been bottoming on the 65-minute, and then looking at the 5-minute for a short-term trade, which might be actually setting up. So right now, this is a narrow range bar. Doesn't mean it has to stay a narrow range bar until the end of the day. We don't know. Upworks. So these are all going to find narrow, wide range bars from yesterday. That's a big one and a big gap up. So this is the start of some kind of a turn. China. Interesting.
Mm-hmm. Oh. Yeah, we looked this morning.
Yeah, Amber. But again, let's go back to, so the combo layout, whatever sector it might be in, right? The only thing that this is going to filter out, there's going to be a filter in here, and all of these things you can look at, you can actually see what's behind the screen, so to speak. But this is looking for stocks. You can see here, well, thing that I made, got to be over a certain price and volume. So you can see it here. So I don't want to see things under $5, and if it's not trading enough volume, I'm not interested either. And we could look at weekly ones. So well, interest rates, an incredible, crazy move in interest rates.
Wow.
Amazing. So again, bullish wide range bars on the weekly. What do you do with that? Well, you look at that at the end of the week and you see those, and those things could be setting up. You have to understand multiple time frames. And those could be setting up. You got a wide range bar reversal on the weekly, and this is in a downtrend. Ideally, we'd find stuff in uptrends, but we could have where prices could move up over the next several days, or maybe it's if it was in an uptrend in a bullish market, it could have really large moves. And this is down a whole bunch. It's in the downtrend. So obviously we're in a bear market right now. But look at this. This is this is somebody's buying this, right? That I know it's been in conversation. It's been all over the place, but just looking at the pattern, it's really erratic, but a wide range weekly bar. And so now it's starting to tighten up like that, like it could potentially break out and go higher. So again, we start looking for range contractions. So here's again, we're back to TBT. So there weren't a lot of examples there. I don't have any bearish ones in here for today. On a weekly, let me just refresh that. Maybe it's got to be refreshed. Yeah, just had to be refreshed. So to refresh these, you just have to switch back and forth. So there's no bearish ones for today. Things aren't moving. Rocket. That's a nasty move to the downside.
Wow.
And so it was up last week, and now it's down. So we'd look for some kind of flag, pendant, whatever. If some kind of tightening up here, and then the next leg down. So I'm being asked about, speaking of volume, wide range bars, no volume versus wide range big volume. So volume is what we call as being secondary. Why is it secondary? Because for all the years that I've done this, and especially in the early years, it was about, prices had to go up on higher volume and down on higher volume with the trend and contract, counter trends on lower volume. And I was like, hey, this is a bull market and it's going up on low volume. And so this whole idea, and I don't remember what year it was, but it was like, oh, this is really still a secular bear market because it's going up on low volume. And I'm like, McFly, we're up 25%, and you're still calling it a bear market. Anyway, there's a lot of information out there that has some validity to it, but you got to use common sense. And so when you see something coming down like this on low volume, it's like, for me, it's like, so what? It's going down. That's bearish. It's a big reversal. Like, Frank, replays are part of MT Weekly Advantage. For $37, you get today's, you're going to get the history of MT Live, so you can go back and watch the old ones. You get the trade of the week that Dan reviews, an actual trade. You see the old ones that you could review. It's like a phenomenal educational service. There are lessons in there. It's a no-brainer for $37. So, guys, we're going to run. I hope you enjoyed this MT Live. We'll be back next week. I think Dan will do your company earnings one.
Sure.
And you'll love it. Right. So everyone, MT Live is fantastic. We'll be back next week. As always, if you have questions, email us. Talk then.